All right. Good morning, everybody, and welcome. It's TheoTrade Chat. It's Don Kaufman here, of course, on this Wednesday. I know it's weird. It's kind of a Wednesday. We're already halfway through this week. Oh, the S&Ps, of course, on this holiday trading week they're only up 15 right now. Look, I remember at some point in the middle of the night, I woke up and the S&Ps were up 39. They've been slipping back ever since. It's the NASDAQ, though, that is seeing some of the sell side activity. Just to give you, though, a feel for like any intensity in trade, there is none. The S&Ps in overnight trade have done 183,000 contracts, which basically constitutes absolutely nothing. If you're looking at the tape right now and you're trying to justify that the market is higher or lower predicated on that kind of volume, I think you're doing yourself a bit of a disservice, at least at this point of time. So what I would think when you come into today's cash open, you can look at the pre-market and financials a little higher. Energy is going to be higher, but energy is higher because oil sees issues. They got issues. Nevertheless, when you start to look down the list of the usual suspects, very strange. Everything, okay, and I do mean everything, is completely flat across the boards. I mean, just they're not moving at all. Meta is your biggest mover here, down some $6, but $600 stock. It doesn't mean a whole lot. Nvidia has a very mild bid, which is offset by Nvidia, and then Nvidia is offset by Meta, but and then we have Broadcom down mildly. It's a slop fest, people, into the cash open, an absolute slop fest. You're going to have to allow order flow to kind of dictate what this trading session is going to look like. Also, in recent trade, okay, all signs lead to 68.50 on the tape. Doesn't mean we have to get pulled back there, but surely doesn't help. Let's come to today's cash open here. It's going to be a slop fest of an open with a very mixed advance decline line, broken down ticks. As I was saying, a mixed advance decline line. There we are, 50-50. When it comes to ticks out of the gate this morning, it's going to be slop-tastic. No one's going to care what those ticks look like because right now, okay, it is basically it's all tech all the time. Now, what do I have on in Meta? I had a bullish trade on in Meta. Okay, I'm trading zero DTE butterflies. It's okay. It's all gonna be okay. We'll see what actually comes about as this day kind of progresses here. As I was saying about the S&Ps, okay, it's not going to, look at that, ticks are 28, crazy. It's not really going to matter what the pre-market looked like, okay? And that was, again, the very first statement I made, 3-4 minutes ago, specifically because you could just see in the tape right now, it's tech is having issues, no question about it. And even though there's a little bit of a bid under a handful of some of the tech stocks right now, I mean, it's flimsy. And then you have Meta off. That's temporary though, because I'm going to tell you right now, when it comes to Meta, you'd have to look at some of the order flow in here. And there's no justification yet on the order flow. There's actually some put buying going on in Meta right now, but nothing too huge. Only a few thousand contracts have already traded. And you're like, oh yeah, but it's only a minute into it. Yeah, that minute counts. That minute counts. People, they show up, they trade, okay, and you're going to know about it if and when they do. Just taking a quick glance over at Google as well. So Google seeing some sell side activity yesterday, a little bit of a bounce this morning, and I mean a little bit of a bounce. I've been watching Google carefully in the last couple of trading sessions because the sell side activity in here, I mean, it hasn't caught a bid and can't catch a bid to basically save its life in here. It actually hit the lower edge of an expected move yesterday. And, I'm in a trade on Google that it expires today. And the whole idea of the trade was it was going to hit the lower edge of the expected move again at some point during the day. I don't sit here and because I have a zero DTE trade on. I don't sit here and like look at it all day. It has nothing to do with my trade. What it has to do with, though, is the fact that Google's weak. It's actually just going to, it's really going to decimate the chances of the Nasdaq, okay, going up today. Google has really been kind of the linchpin lately, kind of holding markets back to a larger degree. Like, yes, it is like kind of one underlying. Nvidia hasn't really done much of anything. It does and is a bid today. Nvidia is bid today. That's enough. Okay. So if you have Google that starts to sell off and Nvidia starts to catch a bid, again, all that seems to matter as of late are rotations. Okay. And then we're just transferring kind of capital from one tech company to the other. Microsoft, this is critically important. It is approaching some of its recent lows. Breaking these lows, look, you have to open up like a 3-year chart. You break the lows, okay, which I think is a fairly critical threshold, and I'll just put it at 390. You break those lows, you got nothing. Like this is a big, reaction, whatever, but 350, okay, 300, there is no limitation here to some of the selling that could actually happen inside of Microsoft. And again, I can't stress enough, you're probably only 7 or 8 points away from that in Microsoft. Microsoft's another one where in recent trading sessions, this thing really couldn't catch a bid to save its life. That's been the case of a handful of tech stocks, other than maybe Apple. Okay, Apple having a ripping day yesterday, but backed off heavily into yesterday's close. Take a quick glance. Huge bid. Apple was up $10 at one point and slipped precipitously into the close. Today, okay, there's nothing going on in it. It's down very, very mildly. But I'm watching Apple as well because it has been one of the reasons the marketplace has held up in some of the recent weeks. Again, there's just these rotations, okay, that are playing out. And it's 50-50, right? It's musical chairs at this point. The sign of markets, and I've said this for some time, the sign of markets finally breaking, okay, will be the end of the musical chairs, okay, where the marketplace just basically throws the towel in and we kind of go for it a little bit. And that is, I think on the dance floor for this week. You got 3 days of trade left this week, okay? Tech has been relatively weak, but look, the S&Ps have held the line. As I said to you, all signs point, okay? All signs point to 68.50, which is kind of unfortunate. It's that 68.50. I mean, how many times we've actually traded down there in just, okay? And by the way, I'll put 68.50 on here, apologize. 68.50 has been the cornerstone of all the trade that's occurred inside of literally the last week, okay? If you start to kind of break down markets as a whole over here, just do you some justice, okay? Right in here at 68.50. And it's literally been the center point for all the trade since, we sold off obviously last Thursday, dropped into the 68.50 range, okay? The question at this point is the marketplace here priming, if you will, to head lower? And quite frankly, there's not a lot of sign of that in volatility. I mean, volatility is definitely up there. The volatility futures, so the volatility futures, they rolled the contract forward today, but the volatility futures, they're definitely in a precarious place, but we're not all amped up just yet, okay? And look, as we have been doing, we're going to have to take this day to day. There's very tough trades to be had in that tight of a range for this significant period of time. Of course, a lot of people either don't want to hear it, okay, or don't like to hear that. The way NASDAQ looks like it's actually going to break down here. A lot of people either don't want to hear that or don't like to hear that. But one of the most dangerous things you can do, especially forget about as an investor for a second, okay, as a trader, okay, you may think to yourself, I'm in Nvidia. You may think to yourself, I'm trading Walmart. You may think to yourself, I'm involved in Apple. What all those have in common? They're all part of the S&P 500. And I'm just boxing out the last, and again, this is a very short duration chart, but you can see, okay, this encompasses basically all the trade. Okay, when you're in a tight range for a significant period of time, you build fuel, okay, and when you break the range, the break is quite significant. And I mentioned every day in here, okay, day in and day out, that when you break the range, it's going to be violent. And if you're caught on the wrong side of that range, okay, you're going to get toasted on a whole lot of stuff. So as a trader, what you do in a situation like this, okay, you should be grossly under allocated at this point. Okay. And it doesn't like, look, I don't care whether you're bullish or bearish. Like I have a couple of bearish trades on. Great. I'm grossly under allocated. Okay. That's 68.50. It doesn't feel all that scary. It'll feel more scary if we got down to 67.50 because you get to 67.50 and the marketplace just free falls at that point. And quite frankly, I'm not sure if that's the way that this is, going to play out yet. It appears to be just again channeling back and forth, and things are far more dangerous, than I think that most that trade have respect for. There is a very much right now, a like lack of risk management in overall portfolios. And I'm not talking about on the retail side. I'm actually talking about on the institutional side. All you have to do is look around and you can see, money just throwing caution to the wind in so many different instances. By the way, I wanted to bring up the VVIX, The VVIX continues to hover in or around the 110 level, It's a fairly extreme level, yada, yada, yada. We've all seen this before, But in terms of a volatility indication, of a risk forthcoming, it's a pretty good one. The only thing is, like, VVIX might be hanging around 110, for the same reason I just said. The market's hanging around 68.50. Everybody realizes it, Everybody realizes it. I mean, you can theoretically go all the way back here to the October timeframe, to see that range, right? And this is not even like contract adjusted, This is a brief and fleeting moment, but almost all the trade that has occurred, for months has been in the exact same range. And I kind of continue to stress this because danger lurks in tight ranges. Sorry, I'm reading some of this. So Mark was asking, is it a good time for gamma irons? When you look at these spiders, let's go look at the spiders. And one of the things I do, gamma irons, are actually buying an iron condor. Given the IV percentile or IV rank, it's, you could probably do just that. But, I've thought a couple times, and I'll just be very frank in saying, I've thought a couple times that we were actually going to break, this ridiculously tight range. And it just, it just hasn't happened. There's a few products in here, like XLF. They've kind of broken their range. Like XLF was in a tight range. It's been kind of Mr. Toad's wild ride in here, So it's kind of hard to do this, but you could probably do a gamma iron in one of the financials themselves. But the IV ranks are still relatively low. For those of you that have no idea what an IV rank amounts to, it looks at, like, for instance, today's implied volatility versus a previous 52-week volatility, and it gives it a ranking. Now, there's two different ways to do this. You can do what's called a rank, or you can do a percentile. This one says it's current IV percentile. That's actually really a ranking, When it says it's the 17th percentile, it means it kind of ranks it and goes, well, that volatility is low, versus where volatility has been, over the previous 52 weeks. A true percentile, I actually have a study for that. a true IV percentile, okay, would be much more akin to a time-weighted average in here. And this is a little bit better, okay, because this one actually uses a true percentile, okay, which is basically similar. Anyway, this is just implied volatility, with just some bands on there for extreme purposes only. But notice that this actually takes you out to 1-year chart. So it is surprising to see, even though I'm like, oh, the spiders look like they're ready to roll over. But the volatility, even though it's coming up, and this is kind of important, even though the volatility is coming up, it's still really low volatility relative, okay, to some of the price action we've seen. And this is not exactly a big spike, okay? The S&Ps cruised down to 650, which is 6,500. You see quite the spike. I mean, the VIX almost got to like 40 at that time. And I want to bring this to your attention because holy crap. Like, how did the VIX get to 40? It was a little bit of a sell-off because right now, markets are kind of feeling like they're dangling off a cliff. And yet we haven't really seen the bump in implied vol. So even with today, like, okay, so we're starting to rally back up today. All right. Vol, it's crushing, but minimally. Like volatility probably won't go down a whole lot. Okay. Maybe we're in I don't know, maybe we're in a little bit, if you will, of some oversold territory. Okay. In the last couple of trading sessions, markets are kind of bouncing a little bit. I'm surprised on one front this week, and I am actually surprised on this front. Yesterday had a considerable range from high to low, but yesterday finished roughly unchanged. Today, we've got a bit under us, but still the range, okay, the range seems just a little muted as well. The expected move for today is $55. But again, I digress and remind you that the overall expected move for the week is 144 points. I'm even kind of like not even wanting to put a butterfly up here or down here. I think that that's a massive move, 144 points. Okay. If you look at the SPX right now, still pricing in $93 a risk. Okay. And maybe I should eat my own words over here. We're still pricing in $93 a risk. Okay. Just for the remainder of the week. And the remainder of the week is still 3 trading sessions, but it's still pricing in quite a bit of risk. By the way, even for today, still $44 of expected move, which is more than most days last week. So evidently the market sees something here. Okay. And that to me, a risk in here, especially in the short duration, to me means more than you're like, where do you think Meta is going to go? Okay. I don't know where Meta is going to go. It's going to go higher and it's going to go lower, but I could care less about the directional bias at this point. Okay. Honestly, everything right now is in, okay, are we going to break that range? That's it. That's all that's going to matter because that's when the next allocations are going to come. And I am kind of sitting a little bit tight, wanting us to retest into the 68.50 and maybe I can get some trades on. You retest at this point to 68.50, then I think we probably will break. Today's a little bit under the marketplace. Yeah, I'm not sure it's going to hold. All right, let's go into some individual stocks here. Again, if you're just tuning in, okay, I'm definitely looking right now at markets and constantly focused on a 50-50 advanced decline line and recognizing, okay, we're ready to roll, we're ready to break, okay. We just, maybe we need a little bit of a catalyst to get us outside the range, okay. But I think the only thing I tell you is, the downside convexity is still absolutely there, okay. And I think less and less because we keep testing into 68.50, less and less traders believe that we're going to have this more significant break. So keep your head in the game in the next few days. If we do break lower, okay, I think it's going to be it's going to be big. bottom line, it's going to be a big move. That's what downside convexity means. That, and I am like, at this point, I don't really know what the SPX sees. Okay. But over the years, like, you learn to listen, okay, to this. When I say I don't know what it sees, okay, whatever, it's an expiration here, but why is there still $100 of movement? We feel like right now we can't get out of our own way. Okay. Do you have an answer for it? Because I sure as hell don't. Why is so much movement priced in here? Yeah, $144 expected move for the week. Okay. And there's still 98 or $94 up on the board. That's a lot. It's a lot for, it doesn't even have a full 3 days to trade. Okay. And news and so forth. Okay. Doesn't mean a damn thing to this marketplace. It doesn't mean anything. Okay. There was news on oil. Let's talk about oil for a second, because there's belief that, obviously a war we could be on the precipice of a war, or at least some type of military activity. And you see that in oil, okay? What you don't see is any movement whatsoever, okay? In my opinion, that's negative regarding the price action inside of oil. Once again, I come to the idea, okay, war can be expensive, war can actually choke off oil, okay, but market cap of, for instance, Google, okay, it's far bigger than that. Nobody gives a crap. Seriously, nobody cares. Okay, how's that going to impact Microsoft? Yeah, whatever, man. Nobody cares. Nobody cares. Okay, doesn't matter. Doesn't matter. You just keep right on moving. Speaking of how nobody cares, Amazon, okay, you should start caring. That stock's actually 200. Okay, this thing, I mean, some of these stocks are down big. And one of the things also you don't see, like really advertised out there is, are you aware that Amazon is down over 20%? Okay, which would be bear market territory. Evidently, okay, no one's looking at Microsoft, which is down 28%. Okay, I'm not even going from the absolute high, just down 28%. So we went to Amazon, Apple. Okay, let's go to Google. Just making a quick point over here. Google. Okay, Google's off about 14%. Now, I'll continue on here. I mean, Tesla's not even getting hit that hard. Okay, Tesla's off. Okay, by almost 17% from some of the recent highs. Almost every one of your stocks is either in bear market territory. I'm just going to go from the recent high here. Okay, from the recent high in Meta, it's only off about 15%. Every one of these stocks is in corrective territory or bear market territory, other. Okay, then maybe Nvidia, okay, or Broadcom. Even Broadcom, you could probably make the argument, right? In Broadcom, again, you can make the argument. I don't think it's really valid. It's down 20%, but I don't think that that's a valid argument in there. They're all up 20%, 15, 20%. How's that marketplace still at 68.50? Okay, and this is exactly where I'm saying, I think institutional risk management sucks, because their idea right now of a hedge is to do stuff like, you know what? We're going to buy the housing market. We're going to buy the housing market because that damn AI, that AI can't influence the housing market. You still got to get people up on a roof. Okay, at least for the next couple of years, AI is not going to be there. The only problem I have with this idea is people actually have to buy the houses. Okay, men with jobs, Jerry, men with jobs. Seinfeld's like, what, 30 something years old now? Holy crap. Okay. Still watching it every night when I go to sleep. Pisses my wife off, so that's why I do it. Actually, I think she secretly likes it. Don't tell anybody. Okay. Throw money into XLU. Okay. Look at some of these products. I was looking at this earlier today. All right. Yeah, there you go. Xterra Energy. Okay. This is some of the problems that you're actually going to face. Okay? We're buying things not because they're actually going to make money. We're buying them because we don't think that they're going to fire everybody. Okay, and they're going to be unimpeded. But the reality is they're likely to be impeded over there. pretty wild. All right, onward and upward. Let's actually cover a couple of individual stocks. Okay, so $55 expected move for today. Actual move thus far 17. Okay, we just had a scary couple of minutes where we sold off a little bit. We've got a bid back under us. It's the NASDAQ that's getting all kinds of crazy in here. It's been a relatively tight range. But hey, look, okay, the financials, that's a big bid. Financials are up by the tune of 1%. Once again, some of your tech stocks kind of continue to be some drag in here, including the likes of Meta. Okay, Meta again just dragging along. I wanted to show you like an auto expected moves. Okay, that is relatively flat. I actually thought today, and I don't mind saying this, I thought today that Meta would catch a bid and head right to the upper edge of the expected move. And the reason, okay, that I thought that, and I'm actually going to just show you, the reason I thought Meta would catch a bid, you don't see too many up days in here. Okay, and I know it's off by like 1%, but if the markets are going to rally, okay, watch Meta throughout the course of the day. Nvidia, okay, does have the bid. Now, Nvidia facing earnings next week doesn't seem to necessarily be impeding upon the stock, but we're still completely range bound. And we've been in that range, okay, literally since July. I just keep mentioning that, right? All right, onward, okay. Let's talk about oil seeing risk. So I've already brought up oil a couple of times, okay. There's not a lot of commentary, okay, needed here. Markets are pretty efficient in terms of, okay, seeking out and disseminating information, which it does instantaneously. So trust in the fact that oil, okay, you're looking at it like, oh man, that looks like a huge move. In perspective, it's a 3% move. And yesterday it was thought like, oh no, we're going to have a deal. Okay. And in fact, okay, the way it was positioned yesterday, and I was mentioning this while I was in chat, I was typing in the chat, okay, it was positioned yesterday, a deal kind of got shoved down, okay, the throats of the Iranians. And the deal basically came down to do this, okay, or suffer the consequences. And lo and behold, okay, the marketplace in oil listened yesterday, backed off, okay, and again, I'm getting specifically at oil. The market listened yesterday, backed off, okay. All we did is recoup, okay, some of what we lost yesterday. Like I don't want to sit here and prognosticate on the fact that war is coming. If things are going to get serious, you would expect that oil would have broken out. Okay, oil could easily be back to $70 a barrel. We're nowhere near that just yet. So again, perspective here, okay? And oil is bid, markets are efficient, okay? Things have not gotten and deteriorated to the point, okay? It's just maybe a little bit of a prelude right now in this marketplace. Moreover, if you take a look at like volatility, so I build some studies and stuff, but if you take a look at volatility, okay, yes, it's picked up, but volatility, although it's picked up, it hasn't broken out. Okay, you can also look at this. Sometimes it's easier. I hate this product like USO. I hate the USO product. I really do. But the volatility sometimes, okay, are cleaner to look at. And in USO, by the way, why do I hate USO? Okay, USO can be influenced by contango and backwardation in a negative way. It's hard to borrow. And, okay, this is what we term a limited partnership. Everybody familiar with a limited partnership? If you trade actual USO shares, not the option, but if you trade shares, okay, of USO, you have to then file a K1 on your taxes. You get a K1 and you have to file it, which is a pain in the ass. There's no escape from it. Okay. And USO, they're notorious for screwing up their K1s. I pay my accountants X amount a year. And first of all, I got a K1 from USO one time. I got a K1 in the mail. I want to say it was in late March. So totally forgot about it. So My taxes are pretty much ready to go. It's when I used to actually do my taxes on time. My taxes are pretty much ready to go. But in late March, I get the K1. I have to hand it to the accountant. They got to go back and do everything. Okay. Okay. And then I got another K1 in June restating that their original K1 from March was wrong. So I have some nice words about USO. It sucks. I will never buy or sell these shares ever again. There is no escape. If it's a limited partnership, I don't need to trade it. Pain in the ass. Okay. Hate this freaking product with a deep passion. I mean, it literally cost me like, I don't know, another $4,000 or $5,000. Okay. In accounting bills to have to go through this. It was a mess. It was a freaking mess. I had to like refile taxes and stuff. Okay. And I traded it heavily, traded, a couple thousand shares on either side of it, whatever. Okay. The only reason, okay, I like looking at it is because its implied volatilities do tell a little bit of a better story. And I sometimes in markets will look at IV, sometimes more than just price action. And it tells the story like, okay, but risk was higher even a few weeks ago. So a few weeks ago, risk was higher than it is right now. And that's the kind of stuff that like people I just don't think look at often enough. They just don't look at that. They just go, okay, so we were here and now we're here, but war is coming. And I'm like, yeah, but if there's risk of war, wouldn't you want to actually look at the risk metric? Kind of makes sense to me. So you bring up the implied volatility, you go, oh yeah, okay. So the chances of war are there right now, but they're not as high as they were like a week ago. I think that that's the way to look at it. There's one other way you can actually look at this. Implied volatility gave a damn 2 weeks ago, but it doesn't care as much right now. Okay, so that's another way of looking at it. Meaning that like war could be coming, but everybody's like, it's gonna happen. Markets like they take a hit, okay, and then the next time they take the same hit, they're not surprised anymore. I always explain markets like this big, ugly, scary movie. And the first time you see the scary movie, you're like, holy crap. The second time you see the scary movie, you're like, that is scary. The third time you see the scary movie, you're like, lady, don't go in there. He has an axe. He's going to kill you. And it's like the worst movie you ever see. That's kind of what we're up against right now. Anyway, onward and upward. Okay. So Jeff was saying, let me get this straight. You advise against USO. USO is the worst damn product ever. You got that, Jeff? Worst product ever. So it is horrific. Even inside of your retirement accounts, it sucks. Okay, let me tell you how much it sucks. Sucks. Okay, nobody ever tells you about limited partnerships. What's funny is on USO, I noticed something interesting on here. They used to make it say limited, like LP, limited partnership. Okay, and they were required for a while to do that. Well, bastards don't even have that. It might be in the logo up here. You can't even really read it. Okay, I can't see it. The fact that it's hard to borrow though is not too special. But if oil is in a big contango, it's not. It's in a bit of a backwardation. It's mild right now. But if oil's in a contango, it also hurts the USO. By the way, speaking of markets, it's alive. Okay, it's alive. All right, onward. I'm looking at a few things that I have on right now. Okay, onward and upward in here. Okay, a couple of earnings announcements. This is a kind of an interesting one. If you're not familiar with this company, Fiverr, Fiverr is you get stuff done relatively inexpensively there. Okay, that stuff could be tech, that stuff could be videos. I could go on all day because I've used Fiverr years ago, like 10 years ago. We were using this company extensively to get some stuff done. It is almost out of business at this point. Okay. It's, this came up on my radar screen only because it had earnings today. But just to show you, okay, the people like AI is not killing companies overnight. It's not doing this, okay, except Fiverr is basically out of business. And a huge, huge number of gig workers around the world were relying on Fiverr for a significant period of time for income. So if you want to see, the only real reason I'm bringing it up, if you want to see, okay, in real time, like in the context of what is AI doing, okay, uh, it's not about the share price, okay? It's not about the fact that, and this is, again, to put it in a real context, this was a $333 company, $336 company. It is now an $11 stock, okay? Obviously, the COVID boom for it, it has been seeing sell side activity and substantial sell side activity from the price point, a recent price point of 35, all the way down to today's $10 print. Okay, it's got a little bit of a bid back under it. Okay, but this thing is it's all but done. It's all over but the crying. Um, you know, the other reason I like to bring stuff up like this, people ask me, okay, is it a good stock then to short? So look, it's easy to borrow. You could definitely short it. I would never short something that was this far into the hole. Okay. I also, and I'm just an overall lesson. It has nothing to do with Fiverr, an overall lesson. Look at the market cap on Fiverr. Look at the market cap. Okay. It's nominal at this point. It's not even $1 billion company. The reason, okay, I would have a deep concern. This is an afterthought for an acquisition. So mind you, okay, it doesn't necessarily have to happen that way and the company can go to zero. But when you are shorting something, okay, if an acquisition happens, stock's going to pump 30 to 50% minimum. And your risk, okay, on the short side, when I do short companies, and I do short companies, there's two ways to do it. I can short shares. That's if I really want to get in there. But if I ever short actual shares, okay, I make sure the market capitalization of the company is so significant that it can't be taken over. If I'm going to short something like, Google, I'm just giving you an example of like the kind of market capitalization it would take. Okay. Otherwise, use a deep in the money put. Okay. If you wanted to short something, when you thought this piece of crap is going to zero, good. Okay. Use a deep in the money put. And some of these are not that deep in the money. Nevertheless, okay. Fiverr, okay. Two reasons I'm showing it. Number one, okay. AI has completely destroyed the company. And obviously, number two, don't short something, okay, that is headed into the hole for the fear that there could be an acquisition. So there's always somebody to scoop up. When something's trading for a few $100 million, somebody can scoop it up overnight because its pieces are worth more than the company itself, or its namesake might be worth more. S&Ps obviously have broken out here today. Nothing to see here. Okay, nothing to see here. We're still, look, expected move is $55 on the button. Where are we right now? Survey says $55. Okay, great. So we've got a bid back under us. And lo and behold, okay, we're back now to the middle, if you will, of the range. Holy crap, we're back to the middle of the range. You know how annoying this is? Okay, I could have been somebody down here, but it turns out that I'm nobody up here. All right, onward and upward from here. Sorry, I'm peeking constantly. I have some trades that are like right on the dance floor. Look at Broadcom. Okay, Broadcom, that's on the dance floor. If we're gonna rally, let's get it done. Let's just rip the band-aid off and let's do this. If you take a look at Meta, okay, the hell's my Meta? Thought this thing would have actually ripped. Nothing. I got nothing. Anyway, and then I've got a couple of bearish ones on right now too. Microsoft sucks, but it's up $3 too. Okay, so the market's seeing a nice bounce. Onward from there. Palo Alto Networks, pawn. Palo Alto Networks. Here's another one, earnings. Okay. Why? Oh, I screw this up every single time, okay, that I bring it up. Like literally every single time. In fact, I screwed up over here too. Palo Alto Networks. Okay. And I did that intentionally. Um, Palo Alto Networks, sell side activity, lowered guidance. A little bit of a warning shot, cybersecurity. They've kind of reinvented themselves a few times. Cybersecurity company, though, quite surprised. If we're looking at like year to date, though, okay, down about 15%. It's kind of right in the neighborhood of where Microsoft is. Just wanted to throw that out there. But Palo Alto Networks kind of continues to see some slippage in the marketplace, even though, okay, they've actually stated they're quite bullish. mRNA, I'm actually giving you a quick update on this one. They got rejected from the FDA. The FDA is now going to listen to them, yada, yada, yada. Okay, doesn't matter at this point. Okay, I have to ask a question. There's no politics involved. Okay, no politics. mRNA, it's Moderna, okay, is coming up with an mRNA, okay, type flu vaccine. Would you take an mRNA, a Moderna flu vaccine? Just yes or no. No politics, no crap. I'm just curious right now. Okay. Would you take an mRNA flu vaccine? We got one. We got one. Okay. So, Arthur said yes, microbiologist here. So I actually was in the first generation. I did the equivalency of a master's degree over in Australia. It's called an honors degree, and we were heavily, heavily involved. In the group I was in was like into RNA and messenger RNA. mRNA is messenger RNA, and yeah, I've read some papers and stuff. I'm a hell no. I'm not doing it at this point. Okay, but I find it interesting because people, even with a background in it, it's been very, very mixed. I was just having this conversation yesterday with somebody that's a renowned doctor here in Arizona, and not going to mention her name to protect the guilty, but she's like, not taking it. It took me like 30 minutes, okay, to break her, but she's like, okay, fine, I'm not taking it. I'm like, yeah, it's exactly. I was just kind of curious about that. Um, all right. It's wild though, the fact that they're pushing this through and that the company is still, and again, the reason is because I saw the responses in chat. It was like, hell no, this is still an $18 billion company. And all politics aside, okay, it's still an $18 billion company. Clearly, it's off the $500 mark. It's still an $18 billion company, okay? And I'd be hard pressed to find, let's say, maybe 1 in 10. To be fair, maybe 1 in 10 would even consider actually taking this vaccine. Okay, I was interested in that one. So I guess if gathering anecdotal information helps you to some degree, okay, what is this company based on right now? I mean, reputational risk is there. Like Pfizer at least had other drugs. Okay, Moderna doesn't have anything. They have mRNA, and that's predominantly it. Okay, onward and upward from there. Okay. Oh, interesting. All right. Somebody said won't do mRNA for our cattle. Okay. I don't have any cattle. I'd like some. I could do that. Okay. Move out to a cattle ranch. Okay. Tend to the chickens. I'm down for that. Are there chickens on a cattle ranch? I have no idea. I really don't. I don't know the first damn thing about farming, but seems like they're probably going to need that. Okay. I'll get my Optimus robot to actually take care of the chickens. Hmm. I have a half a cow in the freezer. Okay. LeBlanc, that is not the strangest comment I've actually heard because I literally got one of those the other day from a buddy of mine. Most people actually know who he is, Larry Williams. Okay. So he has a place up in Montana. And he's like, oh, we have like a whole half a cow in the freezer up there. And he's like, we're just not eating it. We're not up in that property often enough. I'm like, that's just cold up there. Would you raise your own beef? Like if I raised my own beef, I would have like, one head of cattle, okay, go out, pet them and stuff. I couldn't eat them after that, okay? We can't eat them. I would name them. All right. I've always wanted to try to like put a saddle though on a cattle and ride that little bastard, but it's a bad idea. Okay. The stupid ideas I have, okay, I'm not supposed to, do those anymore. I'm approaching the age of trying to limit the stupid things that I do. It is hard, very hard. Notice as we've actually rallied and tech has rallied, the financials have actually backed off a little bit. Looking down again, the advanced decline line still sucks over here, 50-50, but it is interesting to see even like a healthcare, okay, it's kind of flattened out right now. XLU, okay, some sell side activity in here. It is very peculiar though that again, most of your sectors are up right now, but the advanced decline line is just crap. Okay, this is even though we're bid right now and the S&Ps are up 50, it's still a really slop-tastic day. If anything, this makes it harder to trade. Okay, I love this. We had pigs that we named and ate. By the way, I'm just gonna let everybody know if you're a vegetarian, I'm fine with that. Okay, I am fine with that. For a while, my wife was going that way. Not anymore. Okay, but I'm fine with it. But here in chat, we'll eat anything. Okay, that's it. It's TheoTrade. Eat anything. So I've gotten a couple of emails before where people are like, "I was offended that you ate beef. I was offended that you ate my plant." Okay, you've seen it. It's beautiful. Okay, one of my kids actually has a name for a plant in our house too, and I'm like, "Oh my gosh!" So he actually was growing a plant in the house. Okay, started off as a science experiment. It's really cool plant. So he names the plant, plants in the house, yada yada yada. Okay, all of a sudden time goes by a couple of weeks. Okay, nobody waters the plant dies. Secretly like throws it away. It's never come up again. It is never to be spoken in this house. Okay, she offed the plant. Okay, I know. Okay, I know who killed it. Yeah, somebody does eat iguana, so I don't eat those. Okay, meat. Yeah. All right, onward. So one aspect when you are looking at the tape today, when you're looking at the tape today, okay, capital in, capital out, and so forth, it's more or less like if you're looking at this and you're thinking to yourself, because I saw somebody just capital's pouring in over here. Okay, so let's look at Nvidia. Let's make a quick point over here. Let's look at Nvidia. Over to the option statistics in Nvidia. And what you're going to see is I saw this a little earlier, there's been some raging call buying going on here, some put selling. Okay. One thing, even though we can look at this and say like the amount of capital, okay, advancing versus declining is huge, but market making still buys shares, right? So, and that counts in here. Market making buys shares. So if you're buying calls, okay, and forcing capital into Nvidia, it is what it is. Like looking at, but there's still capital flows into the marketplace. I'm not disagreeing, okay, but it's not like what you think it is. Okay, this is not like are people like buying Nvidia because they're like, this is the best investment I've ever had. Okay, those days are gone. They're gone. I think that fundamentals play a role in markets, and they still play a role in markets. But you can't think today. You have to think 3 months, 6 months, 9 months out. Fundamentals still play a role. Technicals always will play a role. But in the here and now, when I talk about like order flow, okay, there's no technicals, there's no fundamentals. Okay. If there were fundamentals, and if you really did believe in fundamentals, then you should look at Walmart, okay, and realize at a 45 PE ratio, okay, that things have gotten maybe a little stupid because Walmart and Nvidia have basically the same PE ratio. Okay. So if you ever like, because I've had people like shoot me an email, okay, and they fiercely defend like fundamentals. Okay. One of those people is probably Jeff Bierman. So sorry about that, Jeff. Yeah, Jeff is actually less about that because he looks now at the fundamentals. He goes, this is just sheer stupidity. Okay. Like people get on TV and they talk about like the fundamentals in the marketplace. So how do you then quantify Walmart? It's freaking Walmart. I know they're a tech company now versus Nvidia having roughly the same PE ratios. Okay. I mean, because in the end, like you can boil down, like, whether you're into PE ratios or not, okay, it's price to earnings. It's price to earnings. Like, I'm sorry, it still does matter. And the beta of Nvidia is like 2.3 here. Okay. We're in Walmart. Wait for it. Okay. Wait for it. Is 0.64. Okay. You know, it's freaking Walmart. Okay. When you think about a 45 PE ratio in Walmart, I want you to remember the Walmart greeters. All right. That's my story. I'm sticking with it. Higher PE ratios than Google. Okay. Valuations, they're all over the board right now. Okay. You look at stuff, my personal favorite lately has been looking at Caterpillar, of course. Okay. And Caterpillar, which is racing like a tech company. But I come to find out it is tech companies that have been buying their equipment. I was talking about that specifically yesterday. Okay. The stock though is up. I mean, from some of the recent lows, okay, look, it's up well over 100%. Okay. It's going to tag 800. 800. Now, this is something that, for those of you that have been around here at TheoTrade for a while, I traded this considerably. Okay. Traded it heavily back in like 2018 time frame. Okay. This is absolutely terrifying. Not because it's a long or a short, it redefines the word parabolic. Okay. This is, is it going to be the end of Caterpillar when this thing, peaks out? Okay. You're looking at Deere, by the way, has earnings, I believe, tonight. But when you look at stuff like Caterpillar, okay, you might be looking right now at all-time high ticks. Okay. You're never going to see this again. In my opinion, maybe it hits 800. You're never going to see anything like this again. There's nowhere for that company to go. Okay. It can definitely still, like when we talk about like downside convexity, to me, on a longer term horizon, and I apologize, I don't want to get into like a trade that's like for today or tomorrow. On a longer term horizon, okay, how much more upside does this have versus downside risk? We talk about downside convexity. All you have to do is look at a chart, okay? And then sure, you can sit here and compare it to like some of the fundamentals, you know, because 40 forward earnings looks like reasonable. I'm just being facetious on that front. Okay. This is absolutely chaos in there. The PE ratios, we've gotten to a point of stupidity, and I don't think anybody's calling it what it is. Right. You can even look at things like implied volatility, should be a little bit of a warning shot. Okay. Forget about earnings. Do you know the implied volatility is going up with the stock going up? Okay. That should be a little bit of a warning shot being fired. Nobody is on like nobody is on that watch. They're not paying attention. Okay. It's like, the marketplace is literally asleep at the wheel, but there's no fundamental basis, okay, for a lot of what goes on, okay, in the tape. And to me, that is, I'm not necessarily trying to pull up GE. For me, that's actually going to be one of the edges, okay, in the near future is just this, like, recognizing that no one really gives a damn on that front. Anyway, onward. So Toll, okay. I wanted to bring this up briefly. Okay, Toll Brothers earnings. The stock has a mild 1%, 1.5% bid under it. The reason I'm bringing up Toll is I absolutely do have a trade on here. My trade has 86 days, 86 days remaining. The Toll trade, which I put on, 10, 12 days ago, the Toll trade is still very much in play. But I'm just saying, I used an out of the money spread, and the out of the money spread, of course, has a lower probability associated with it. Okay, it's a lower probability of success. Okay, but I added a few contracts to this yesterday just because I got them at a decent price. Just to show you though that the markets are a little wider in here, but you absolutely are capable still of filling in here. So just a handful of contracts out there. It's interesting though, even earnings, it's only trading like 1,400 contracts, which brings me kind of full circle. We are still having, okay, this incredible, and it really is incredible, concentration, okay, of liquidity in the marketplace. If you're somebody like Tesla, you're trading, okay, meaning that you've got good contract size. Even something like Caterpillar, which is just showing there's no contract size at all. Walmart, which is completely in play right now, still minimal contract size. And I continue to reiterate this because you would think a company like Boeing, right? Everybody knows it. Caterpillar, everybody knows it. Costco, everybody knows it. And we've all traded this stuff before. Okay. A lot of these products right now are deemed untradeable. When people talk about like scanning and so forth, you can scan, but I'm telling you, the subset of stocks that you are going to scan in, okay, needs to be minimal. Like I'm concerned, like Deere, right? What am I concerned about? Deere, okay, has earnings. Deere has earnings, okay? And again, I'm zooming in just to show you Deere earnings before the market tomorrow morning. Now, can I trade Deere? Okay. And the answer to that is probably not. I'm actually not, I'm not going to be able to trade Deere. So there's nothing I can do. There's not enough open interest. There's not enough contract size to support me. There's just not. Okay. If I wanted to trade one butterfly myself, okay, I might have a tough time in here, but look at this. It's just not there. You know, the crazy thing is when you look at something like Caterpillar, okay, it's got some contract size, but the bid offer spreads are like $2 wide. This is a monthly option that's going to expire this week. Bid offer spreads are $2 wide. Okay. It's just not there. Okay. It's not there. And I'm not going to force something, okay, that's just simply not there. Look at this. Even Costco, which I had a spread on, but the liquidity has completely contracted. Okay. Yeah. By the way, S&Ps as they head a little higher. Okay. All right. There is nothing, okay, of a big move in this marketplace. Okay. This is a nothing move and likely, okay, could see a number of reversals throughout the course of the day. We hit, okay, the edge of what was expected in the day. We're going to look at the SPX briefly. Okay. They've now crushed down the volatility to some extent. Okay. So the SPX shows that they've crushed the volatility to some extent, not too crazy. We're still showing a $33 move. You're still, in terms of an advanced decline line, it's positive, but it's still sloppy. 64 products to one side of the marketplace. Okay. Tech is up, but it's mild. Like, what do you really got? You got Nvidia, okay, and maybe you got a little bit of Amazon in here. And Amazon is way oversold territory. Nvidia, okay, a little bit of a bid, mainly news driven, okay, news driven bid. That's it. The other stocks are basically waffling back and forth. Energy has a bid. This is obviously, you know, somewhat news related. Hasn't moved since the cash open, and the financials are up nearly 1%. Okay. There is no, you know, this is where this is a bullish or bearish move. Okay. It's a reflexive bounce right now, maybe at best. Okay. Likely still, though, we could test into, and it's so ironic that the absolute lows in here are 68.48. It's right on the 68.50. There's still a pretty good chance, okay, that we could get a reversal at some point today. I think it's too early though to trade for that, right? So I'm going to sit here, okay, ever so quietly and kind of stalk this marketplace in the next few hours, and see if I can't get into an intraday position. And I'll let you guys know if I place an intraday position. So I step up, I take a couple shots throughout the course of the week. Okay, one or two of those shots has to pay me in an entire week to make it worthwhile. Literally, I'll step up almost day to day. I'll take a 0 DTE shot. Today, when I think about like 0 DTE, I could do it in the spiders, the XSP, which is the European style. It's cash settlement of the spiders. But I think it's too early at this point. Okay, I can see like volatility still kind of crushing down a little bit. Okay, this leaves more room to the downside. I'm still going to sit tight also because like Meta, okay, I would have expected Meta to rally a little bit more. We're not getting a lot of price action out of some of the big tech companies. And I know it better than anybody because I've got a bunch of trades. Okay. I have a bunch of zero DTE trades on a few of these tech names. So, if we're going to get moving over here, okay, let's do this. When you look at something like Broadcom, it's a 1% move, which, okay, is really meager versus some of the previous day's moves. Okay. This is a very inside day in tech, a very, very inside day. Okay. Meaning that tech, it's not really in the leadership role today, other than possibly Nvidia. It's slow. Okay. It's literally slow. Nvidia's got the bid. In fact, Nvidia headed towards the upper edge of its expected move. Okay. Amazon, it is at the upper edge of its expected move. This is an interesting one too. Okay. It's one of the only ones I did not trade for today. But Apple, okay, back a bid back under it after 2 absolutely brutal days. But again, this could be sold right back into in the next couple of hours. I'm going to sit tight. Again, I'm going to try to wait and see if some of the volatility crushes before attempting to take an intraday position. Again, slow start to a day, even though we're up like some 50 odd points. Okay, it's exactly what we anticipated to be. Jeff, how you doing this morning?
I'm doing well. You said something earlier that struck a chord with me. May I repeat it?
Sure.
These money managers are finding like mythical ways to justify why Caterpillar and these stocks at 90 RSIs are what they are with the PE ratio detached. These are the type of times where when you look back and Caterpillar corrects eventually 50%, that you stop and say to yourself, what was I thinking at the time? That's because I ran a hedge fund for 10 years. I'm like, what the hell was I thinking? Why did I not sell that stock? And it would drop 50%. And you
Interesting.
justify in your head reasons why. And you know the reasons are illegitimate. They are illegitimate.
Well, of course, but if they've got capital to work, I mean, so you're a money manager, right? You got
Yeah.
$1 billion. You got $1 billion under there. You can't really go to cash.
Nope.
Okay. You can move to bonds, but none of your
No,
investors
you
want to
won't.
see
No, you
that.
won't.
Right? You won't because none of your
No.
investors want to see that.
No.
So you just rotate and just whatever. I mean, they just don't give a damn at this
Nope.
point. You look at Caterpillar though, and I can see the RSI actually starting to diverge a little bit lower in here. Walmart obviously diverging a little bit lower. Like there's some breakdown in a few of these. Nevertheless, okay, but Caterpillar, when you look at like a 15-year chart, okay, is just wild. Just anybody to
It's
actually truly
stupid.
buy it, to
Yeah.
buy it at those levels, okay, um, it's insanity. I mean, literally, okay, it's insanity at this point. But all right, I got to turn it over to you. I've
Okay.
got to I gotta go hop on call. I got to do
You
uh,
shooting Schwab today?
yeah, I do Schwab every
Uh,
Wednesday. That's crap stocks I'm talking about though. Okay. I mean, today, like I'm very forthright. There's nothing like I might trade intraday, but I don't want to position myself even like a week out because we're right on that cusp. We're just right on the cusp, okay, of a more significant move in markets. And I feel like I kind of got to let that play out before I start to step to the plate again. Jeff, it is all yours.
all right, Don. See you later. All right. Let me kick this off by saying good morning and welcome to the second hour of TheoTrade. I am Professor Jeffrey Bierman. I am broadcasting live from Chicago. And today is Wednesday, it is February 18th. It's 2026. It's good to be back in the saddle in my normal time slot. I was thrown off yesterday